You're going to be in that room later today. What are you expecting from Jay Powell? Hawkish tone, dovish tone? Also, we don't get any economic projections from the Fed this time around, but in previous meetings, Jay Powell's taken the time to update and say if those projections are still relevant or if they're not relevant. Do you expect the same today?
Yeah, so I think it could be a really interesting meeting because there are a lot of things that Chair Powell could say that would take us in a slightly more hawkish direction. I think it's likely that he is going to come out and repeat the message that Fed officials have been repeating recently, which is that they have a lot of latitude to be patient with cutting rates. They don't have to rush into this. They can take their time. It can be a case where we keep these rates higher for longer. But I think there are going to be a lot of questions about, is there a possibility that the next move is actually going to be a rate increase and not a rate cut? And there's going to be a lot of people asking him whether those 3 rate cuts that were projected earlier this year are still at all realistic. And, I think we've seen Fed officials kind of backing away from those. I imagine that is likely at this meeting as well. And so I think there are a couple of places here where you could see a slightly more hawkish tone. And the question really is just how hawkish are we going to go? Are we going to move to that sort of crossing that Rubicon of suggesting that another hike is actually possible?
All right, so Jeanna, you're saying the possibility of a slightly more hawkish tone. Steve, I want to come over to you. You've led a number of big companies. If we do hear that slightly more hawkish tone from Jay Powell, as a business leader and someone in the business community, what do you expect the reaction to be?
Well, I think what we're hearing from our member CEOs is that everybody's sort of sitting in neutral right now, if you could think about it as driving the car, because they just don't know what's coming. Rates are at, a 24-year high. It doesn't look like there's going to be a cut anytime soon. I expect that Chair Powell will be very cautious. They're very metered there. The market is already down. The pressure is there. And remember, this is a political year. And so you've got a lot of political pressure from both sides of the aisle, not to put them in a bad position. And so, they're under a lot of pressure to make sure that they get the inflation under control. Consumer confidence from the conference board is really not very strong. And there's 2 components to that. One is the current expectations and then also future expectations. It was mostly future expectations over the next 6 to 12 months that really worried people. Okay. So people are concerned about the cost of living. They're concerned about inflation and the cost of debt.
Steve, we're seeing it right now. We're actually showing a chart with that consumer confidence number, lowest read in the last 2 years. You kept mentioning the word pressure. I want to talk to you about how business leaders are viewing the Fed right now in this higher for longer environment. At the same time, we're seeing rates that are higher, but also wages that are significantly higher. We got a report yesterday showing over 4% year-over-year growth when it came to wages in Q1. The average from 2010 to the start of the pandemic was just over 2%. So as a business leader, how are you weighing these twin forces of pressure on wages and also rates?
Well, it's wages, but it's also everything's still up through the supply chain. The inflation is coming down in terms of its increase, but it's still, prices are still and costs are still going up. And you try to push as much through to your consumers and customers as possible, but there's only so much they can take. And so margins, the worry here is that margins are going to get compressed, earnings will get compressed. And, that's what they're looking at here. They're trying to right the ship here, but there's only so much cost pressure you can take. The cost of debt is high, period. They're having, debt tranches roll off. You have to refinance that as you go. There's only, and short term, long term, it doesn't matter. So, this is adding to the costs, in your P&L and on your balance sheet as well. So, business leaders are very cautious here.
All right, very cautious. Jeanna, back over to you. You said Jay Powell's going to probably be cautious, but possibly just slightly more hawkish than he has been previously. So I want to ask you, I know you don't have a crystal ball, you can't read anybody's mind, but what actually matters when it comes to the Fed after this meeting? Is it labor? Is it PCE? Is it, GDP reads? Is it ISM? What actually matters, and what should the market actually be focused on if we want to try to get some insight into the Fed's thinking?
So I think this is actually a great question and possibly one of the most interesting things Chair Powell can answer for us today. Because up to this point, the Fed has really been ignoring a lot of the other economic data outside of inflation and saying, our mandate is inflation. Inflation is coming down. The fact that inflation is coming down means that we don't need to be particularly worried about the fact that GDP growth looks pretty strong and that job gains are way higher than we had expected at this point in the cycle, and that the economic data in general is just coming in a lot steamier earlier than we would have thought. And now we're in this very different world where inflation seems to be sort of flatlining. There are a couple of reasons that economists are finding to sort of discount that. But I think after 3 straight months of it, we're really seeing Fed officials get nervous about that. And in this new world, I imagine that the Fed is going to have to pay more attention to sort of the economic indicators that are forward looking, the job gains, the signs of strength in the economy. And I think that that's the message we could look for from Chair Powell today. Are they paying attention to growth data in a way that they haven't been in recent months? And if so, which ones matter? We had a very strong wage gain number yesterday. We've been seeing pretty strong jobs numbers that we'll obviously get the report on Friday to see if that's continuing. Like, how much are those feeding into the Fed's reaction function? And I don't think we actually have a clear answer yet, because I think that since the last time we heard from him, things have changed.
Jeanna, one last question. We got to go after this. Probably about 4 Fed speakers speaking in the next week after Jay Powell. Should we be really listening to all these Fed speakers, or in your mind, Jay Powell's press conference today, should that be the last word into the next Fed meeting?
Well, I'm interviewing one of the Fed officials who's speaking in the next couple of days, so I would say you should totally listen to them.
Tough spot.
But I think that at the end of the day, it is a committee decision, and in this instance, actually, I think the rest of the committee really matters, because I do think this is going to be a difficult period where they have to make some pretty contentious choices, and in those moments, how much they can get everybody on board is really, really relevant. And so the range of opinions actually starts to matter quite a bit at like this.